Yeah, Peter, the biggest, the worst, the sharpest fall. I mean, it's hard to think of a week where there've been more negative economic headlines, and it really is, as the Chancellor Rishi Sunak said there in the piece, it's incredibly hard times, very, very sad news. I mean, the lists just grow longer and longer. We've had thousands and thousands of jobs already this week that have been lost or put at risk, to add to the thousands more that have come in the preceding weeks. And on top of these very dramatic headlines, there are also other bits of data that are floating around as well that haven't got the limelight but are equally as worrying. So average wages, for example, also seem to be dropping too. There have been as many people claiming unemployment benefit in places like London than there was in the 1970s, the early 1970s. So very, very worrying indeed. There are some signs of things to be hopeful about, but they're pretty few and far between.
What signs are those? Because, as I said, April, we had the same conversation about it shrinking by records, and we blamed it all on the coronavirus. However, the other G7 nations have shown us that actually there's something more problematic in the UK beyond COVID-19.
Yeah, I mean, there has been a bit of a bounce back, as was reported there. We've seen bars, restaurants, shops pretty busy. We've seen that growth that's come back. It has triggered the FTSE index to perform reasonably well over the last few days. So there are signs that the fight back from business and consumers has begun. I mean, they've got a huge uphill battle to climb those, 20%, 21%. That is absolutely, as people have said, unprecedented in terms of a drop in GDP. And there are other problems too, in that the levers that we've got, the fiscal levers, the ability that the central bank, the Bank of England's got to fight back if anything else happens, they're becoming more limited because interest rates, of course, are so low that if we did hit another problematic period, for example, Brexit hasn't really played itself out yet. There are all sorts of issues about how to deal with China. If we get another economic shock, well, then, of course, the Bank of England's hands are tied. They're going to be sort of fighting back with one hand tied behind their back.
All right, but again, why is it that the other G7 nations have fared a little bit better during this crisis than the United Kingdom? Is it the choices that the country has made? What is it?
Well, there's a number of different things that are happening. There were already systemic problems in the UK that were also in other countries too, other European countries, but more pronounced, I think, in the UK. The way that the retail sector was struggling to adapt to the online revolution, that's been well documented. So there are many, many high street brand names who'd really struggled with this sort of economic albatross of having lots of physical shops all over the country at a time when British consumers weren't really sure what the high street shopping experience was for. At a time when you can get pretty much anything you want from companies like Amazon, there are an awful lot of companies that seem to be sort of stuck in a strategy that was better placed 10 or 15 years before. Now, at the same time as that, you've also got issues where consumer confidence has not been particularly high for a very long period of time. And on top of that, you've also got productivity problems. There have been productivity problems all over the world, but in the UK, that we really haven't had any answers to why we're not becoming more productive as a workforce, despite advances in technology. Now, that was all happening before COVID hit, and that's really exasperated all of those problems.
All right, so what does this mean going forward? I mean, I don't think there's a blueprint or a map because the country really hasn't been in this situation. And so the planners, the economists, the finance minister, the BOE, what can they do actually? And I suspect that this is going to be a very long, hard road.
Yeah, we heard from the Bank of England about, in an attempt, I think, to reassure people that the expectation from the economists there is that the financial impact will be potentially slightly less extreme than some people have feared, but it will unfortunately go on for longer. Now, although that in one sense may be seen as reassuring, it also provides a real headache for them because, as I say, they're running out of levers to pull. One of the things that central banks can do if they want to stimulate demand is to tinker around with base interest rates to nudge and shock people into different types of behavior. Very hard to do that when the interest rate is already pretty
Mm.
close to zero. So there are a number of issues. Businesses are fighting back, they are adapting, but they're going to have to adapt very, very quickly if we're going to claw back some of this lost 20%.
Which sectors have been hardest hit? I believe construction might be one of the ones that really got a hiding.
Constructions have been, again, in a very difficult position anyway, leading up to
Mm.
this. There were all sorts of discussions about very large infrastructure projects and how difficult it was for large contractors to actually make anything like a healthy margin on projects. There were very scary stories of very big reputable companies that were sort of accepting jobs purely just to keep the lights on, if you like, knowing that they weren't going to make a decent margin on the projects. So they were already challenged. You add into that fears around Brexit, about labour shortages, all sorts of issues there. And now, of course, the property market itself is under threat. A report came out in the last couple of days that's talked about a short-term fervour of activity, but followed by a medium-term slump. So all of that is very, very tricky. Hospitality, too, of course, has been severely affected. In London, that's a huge part of the local economy, and that's where we're seeing, thousands and thousands of people now claiming unemployment benefit and looking for advice about what to do in terms of losing their jobs.
All right, so unemployment means less consumers can buy goods, which means retailers actually have less consumers to help them build their businesses. So how is the ordinary man affected, those that are lucky enough to be working? We know the unemployed, I mean, their plight is just terrible, but how is the ordinary person in the street affected by all of this?
Well, we've now got, as I say,
Mm.
signs that average earnings are on the decline. So that means that those, as you say, who are lucky enough to still have a job and a job that is reasonably safe are potentially going to be taking home less money in their pay packets. We've also got issues too, because the interest rates are so low that those people that have hard-earned savings that they've spent lifetimes saving up, well, they of course are able to earn less now. They can't earn as much on those savings and investments. There is a positive sign that there is some evidence that those people that do have some savings because of the lockdown have been able to spend more time reviewing their family's finances, and that will help them to avoid scams and to make more prudent decisions about family budgets. We're even hearing people for the first time ever in their life actually reading the small print on insurance contracts. So things really, I guess, must have had to have got very, very bad indeed for people to want to read insurance contract small print. But there are, lots and lots of signs that over the next 12 months, families, individuals are going to be under a lot of pressure and are going to have to make some uncomfortable priority calls.
All right, and then perhaps finally, anyone predicting what the next quarter is going to look like?
Well, I mean, this is just, it's, I almost hesitate to use the word unprecedented once again. It's probably the most
Mm.
used word at the moment. But there is certainly, I think, going to be some clawback. Whether, how quickly we can claw back that 20% is hard to tell. We've gone 8-9% in recent weeks. I think it is likely that if we don't have any other big calamitous situations happening in the global markets, that we can, at least sort of double that over the next few months. But it's really, really tricky to be precise about this because, of course, so many things are going on. We haven't even touched on the Brexit trade talks, which are still
Wow.
going on. We still don't have a resolution to that. So choppy waters still ahead, and very, very testing times for both businesses and consumers in the UK.